Hey business owners, is your bookkeeping feeling like a chaotic puzzle? Don't worry, you're not alone. Poor bookkeeping can lead to major headaches from tax troubles to cash flow nightmares. Today, we're diving into the top bookkeeping mistakes to avoid and, more importantly, how to fix them, ensuring your financial records are always on point. First up, a classic: mixing personal and business finances. Using your business account for groceries or your personal card for a client lunch might seem convenient, but it blurs the lines, making it nearly impossible to track true profitability and complicating tax time. The fix: immediately open separate bank accounts and credit cards for your business. Be disciplined. All business income goes into the business account. All business expenses come out. This clear separation is fundamental for accurate reporting and legal compliance. Next, neglecting regular bank reconciliation. This isn't just about checking your bank balance. It's comparing your internal records with your bank statements to ensure everything matches. Skipping this step can hide errors, fraud, or missed transactions for months, leading to significant discrepancies. The fix: schedule weekly or at least monthly bank reconciliations. Use accounting software that automates much of this process. Review every transaction, identify any variances, and investigate them promptly. This proactive approach ensures your books reflect reality and helps catch issues early. Our third mistake: incorrectly categorizing transactions. Misclassifying an expense as an asset or vice versa can distort your financial statements, inflate or deflate your profits, and trigger red flags during an audit. It directly impacts your tax deductions and overall financial health. The fix: familiarize yourself with common accounting categories. When in doubt, always err on the side of caution or consult a professional. Most accounting software offers customizable categories and guidance. Be consistent with your chosen categories. Accuracy here is key for legal compliance and informed decision-making. Finally, failing to track small expenses. Those little coffee runs, office supplies, or subscription fees might seem insignificant individually, but they add up. Overlooking these can lead to understating your expenses, overstating your profits, and missing out on valuable tax deductions. The fix: adopt a robust system for tracking all expenses, no matter how small. Use expense tracking apps, keep digital receipts, or dedicate a specific folder for physical ones. Get into the habit of recording expenses as they occur. Every dollar tracked is a dollar accounted for, potentially saving you money at tax time. Avoiding these common bookkeeping mistakes isn't just about compliance, it's about gaining clarity, control, and confidence in your business's financial future. Implement these fixes, stay consistent, and consider professional help if you feel overwhelmed. Your organized books will be the cornerstone of your business's success. Thanks for watching, and here's to healthy finances.